Hello everyone.
Hello.
Hey, it's NJAT here. It's myself, Chucks.
And me, Burton.
So yeah, welcome to our week one of our markup discussions. What we're going to do is go through selected trades out of the week and talk on them in more detail. We've got every week will be kind of different, but this week we've got 2 trades that I'm going to go through and 2 trades that Burton's going to go through.
Yeah, so let's get straight into it though. So what you can expect from us for the week's content is very much what we've shown you this week. So we're going to have a focus for the week every single week. And all of these focuses are going to help you to build a narrative to take trades. Obviously the markups, we're going to continue with the markups. We've had some good reaction to the markups that we've done. So anything you guys want to see as well, make sure you just message us and then we can put more detail into these markups on exactly what you want in there. And again, PDFs showing the content, showing the focuses for the week, and then just any other things that you guys want to see or hear.
Just to add on to that, the bulk of the task for us is answering all your questions. So please do keep sending them in. Obviously do what you can to answer your own question and use us more as a confirmation. Sending in your trade ideas is all fine, but your best teacher is the market. So it's better to theorize your ideas or take them on a demo account. And then if they work out, learn from them. If they don't work out, learn from them. And remember just to keep focused on price delivery. So yeah, that's what you're gonna get kind of week on week from us. Typically we take trades every day, so you guys will at least get a couple of markups every day to learn from and how we see the market. So we can move on to, so that's what you can expect from us. And obviously as the weeks go on, we'll continue to grow where necessary. So now we're going to get on to why we delete our content weekly, because a few of you have kind of been asking and questioning as to why we do that. And purely it's because when we was putting this project together, one thing we wanted to do was focus on 1 week and focus on the current trading week. I think a lot of other educators or mentors or courses, they tend to talk about price action that was maybe a couple of weeks ago, a month ago, or the content's pre-recorded and it's old. It's an old price action, price delivery. So our kind of ethos is focusing on the current week, and last week's content is not going to help you this week, right? What is going to help you is the observation on the charts.
Yeah, so you can just start to see it in the moment as well, and review the markups that we send in. So then you can start to train your subconscious to actually seeing this stuff in the moment. Anyone can go and backtest and say that they made 20-30% on a trade, but we're very focused on actually trading and actually seeing the results rather than results from previous weeks. Learning
in the moment and not on past data essentially. For us it's given us an edge, and it's given us the confidence needed to do all of this live and execute.
Exactly. Cool, let's get into the trades then. So we're going to go over 2 trades each and just go into more detail on the kind of markups that we've sent you guys, just so you can hear our thought process and just see things that we maybe see subconsciously that we haven't put onto these markups. I'm going to make a start on my first one here. So this is a 1 hour chart of EU from the week, which we actually sent into the markups. First thing, let's talk about this right here. Essentially, that a lot of people are looking at reversals down here, and all of this price action in here is obviously tradable as well, which we know, as you've seen from all the markups. Let's go to this part. So this is a reversal structure up here, or momentum shift as I like to call it. And obviously as well, just as Chuck's put there, this is the 29th of October. This is momentum shift here. So momentum shifts are going to mean different things, which was a lot of questions that we had before as well. It's like if we're getting reversal structure, like what does it mean on different time frames? Why does it mean different things? For example, if you've got a impulse down and you're seeing reversal structure here, this could just be the start of a pullback to then continue lower. Whereas if you're getting reversal structures or momentum shifts at points of interest, they mean a lot more, because now you're likely to see maybe that next leg up. Even looking at this structure here, broke structure high, this was that potential pullback to continue higher. So it's just about the context. Use your time frames and just think about what it means on each time frame. That's what's most important here. And to just go more into this this chart here, this was an OB that we had, I believe this was on 30-minute or 4-hour, one of these two. But you see we got a reaction here on Thursday, I think this was. If this reaction was a proper reaction to continue this higher time frame trend to the upside, this would have broken this structure here. And because it didn't, we had a reaction but no follow through, and follow through meaning it breaks the level of structure. It means that the momentum is still to the downside. So nothing's changed to the downside. Momentum is still changed to the downside. So we're still overall looking for selling opportunities. Yes, is there anything else you wanted to add to that, Chucks?
I think that's pretty clear. Taking in, the bigger picture here, this is a higher time frame structure, and we are seeing a momentum shift happen. So this not following through isn't a surprise to us. But what we are doing is playing what we're given. We expect that this is a highly likely area that we could see a price reversal for higher prices following this initiation that we had here. So none of this comes as a surprise to us. And as Burton's gone through, the expectation is not the expectation, but the full picture as well understood.
Yeah, we'll go more into price delivery as the weeks go on, and then you can start to really understand why this is a point of interest for us. And I mean, we'll go through that as we're trading during the week as well, and then you'll start to become accustomed to exactly the things that we're looking at. So, like our idea with doing the weekly focus is you can do a little bit by little bit rather than us flooding you with information and then you getting information on overload and not being able to understand the content. We'd much rather take you through step by step, and then you can learn to just build a narrative. And price delivery is something that we've been speaking about recently, and that's definitely something that we'll add in very, very soon. We're just going to go with what people have asked the most for our next weekly focus. But cool, but if there's nothing else on that one there, let's go to the next slide. And we can actually start to go into price delivery here, but it's more about understanding what's happening from here all the way down to here, because everything in this whole picture can be understood. Every single move, every single high, every single low, all of this can be understood by just asking why and then finding out the answer. This markup here was really was more of an important one. Ignore this high as well, ignore that. But we can see the structure still to the downside. We're maintaining these lower highs, maintaining the lower highs all the way down. So structure's never changed. And then now we're just looking at price delivery. Price delivery is how the price is being delivered. So we're either in a range or we're trending. And inside the range is where you want to be looking for them higher time frame. Sorry, not higher time frame. So our future POIs. And then we get the initiation, we get the liquidity creation, and then the continuation. And that is the ideal sell price delivery. And as we can see it here, all through this price action here that we're looking at, if we take the trade that I took, for example, we've got a sideways range, we've got initiation that caused a break of structure low. That's what this INI DOS low here is. And then we just look within price. If we're looking to follow the money all the way down, all we mean by following the money is following the mitigations. So if we start here, for example, we've got an OB here that takes out liquidity, initiates to the downside. We mitigate, which means the money has gone from here down to here. and now this is a whole sideways range. So we know that orders are going to be stacked in here before they're initiated to the downside. And we see this whole move up here. This is what we mean when we say we can see higher time frame OBs on the M1 chart, because this whole move up is essentially a higher time frame OB, because that's all buy-in, and then we get that reaction to the downside that caused the breaker structure. 1 second. Excuse me, guys. So yeah, so that was just that's essentially the price delivery there. Whenever we're inside a range or any sort of sideways price action, you see it here as well. See sideways price action. That is BFIs stacking their orders before they initiate price to the downside. So anyone that has questions about where they're looking for POIs, just go back and follow the money. Start here and go back and follow where the money is in each range, to initiation to mitigation. Just follow the mitigations essentially. And that literally brought us to this point here where we got that higher time frame OB, but then we look inside that higher time frame OB, and that's where we find that last buy candle before the initiation to the downside, which then became the point of interest here. So we know that the money moved from this candle to then this OB, and inside that OB was where the money was last located, because that's the whole push up. And then we get reaction here. Now the money's within this candle here, and we see this inside bar, which is between them two bigger candles. Inside bars signify ranges on lower time frames,
which we'll
so
get
that
into.
inside.
We'll get
again. It's just more things that we'll get into as the weeks go on, and as we focus more on these things, and just look out for the tips as well that we're going to be doing in the moment when we're seeing these things, because it's going to be able to help you to learn these little things in price. But we get another range, we get an initiation causing that breaker structure, and then again mitigation in here. So the money's moved. It's just all about following the money. Follow the money, follow the money. And why are we following the money? It's because we know that these highs are going to be protected. All these highs are protected. None of these highs were taken, because the highs were all protected by the smart money. And that's basically what the smart money concept is. You're just following the mitigations, and then just any of these in here, any of these points on mitigations while the structure to the downside are all potential entries that you can look to get involved in, which is our goal eventually, is to get involved in absolutely all of these entries on the way down. But yeah, so then we literally followed the money all the way down, following the money. This is a whole OB, mitigated here, continued lower, mitigated here, continued lower, mitigated here, continued lower, mitigation, mitigation, mitigation. And that's all we do. It's just very simple as, I say simple, it's just something you want to look out for when you come onto the charts, to just follow the mitigations. The price delivery is going to create the structure. As price moves down, we range, we continue, range, continue. That's what's creating the structure. So the BFIs are creating the structure for you. So people might see that as a downtrend, but essentially this is just range, mitigation, range, initiation, mitigation, and continue. And you're again looking within here for your future POIs once you've seen the direction that the BFIs want to take the price. So that was all for that slide, unless you wanted to add anything.
Here's a good example of which is our weekly focus for this week, is structure and timeframes and how they correlate with each other. Here we can see price delivery is quite close together, and then excuse me, price delivery then starts moving away pretty fast. And notice that, you know, we do consider this as liquidity, but our last initiation, which was obvious, is here. And this is how we're looking at our timeframes. We now know that this is a higher timeframe swing high, and then any move back into this, we're expecting that continuation. And when we're looking back at the origin of the move, we see that we've got 50% of the range, and we have an inside bar. This is a very likely area that we will see price have a reaction at. So understand that these are all intentions from the BFI that are, again, creating this price delivery, and these are all the points of, you know, clues or you know, things we can look at to kind of build that narrative and that logic to understanding what could possibly happen here. And again, Burton's marked this up pretty well, and it is nice and simple when you're just looking at following the money and understanding what a mitigation is, what a reaction is, and taking, being able to read that in the moment and then continuing playing that structure to the downside. But yeah, great example here.
So if everything's done on this one.
And also guys, we're going backwards. So we're going with our most recent trades, and then to our and then backwards in a week. So Friday, or is the day that we'll always start on, and we'll work our way back through the week, and that's how we're always selecting our trades to show you guys. So yeah, second trade for you.
Cool.
This one.
Yes. So following from, understanding what happened the day before is building our narrative to follow this money all the way down, follow the mitigations, follow the mitigations, follow the mitigations. Cool. Now we've had range here, initiation, let's cause this breaker structure. We've got a breaker structure here as well. This is the last place, let me just clear this. This place right here is the last place that we were able to identify the money, which now becomes our future POI. And obviously we've had a break structure has remained the same, still to the downside. So now this POI here becomes something for the future. And as we see as well, something within price delivery. This is an ideal price delivery right here. We can have larger ranges. Let me just clear this actually. We can have larger ranges, larger sideways price action, and within that larger sideways price action, we can have smaller ranges, which is exactly what we see here. And these all just become potential reaction points for the future, essentially. Inside this whole range here, we're just stacking more and more. BFIs are stacking more and more orders before they do initiate price in the direction that they want. But again, that becomes future POI. And something to notice about this candle here, this is a full-bodied OB. Full-bodied OBs are something you want to be looking out for in EU because they contain most of the orders. And as you can see with the move away as well, we see that aggression causing that inefficient pricing, which is just more cause for price to move back up into there because the algorithm's going to have to balance the buys to sells, which means it's going to have to come back up here. And then obviously we've got an OB, which we could play there as well. Unless anything else you want to add to that one?
Yeah.
Trucks?
I hope you wasn't confused on the whole algo thing. But again, anything you're not understanding over time, you hearing us repeat it and refer to it, you're going to understand. So don't flood us with too many questions around.
Yeah, and even to add to more of that as well, if you don't understand something that we're saying and we need to go into it in more detail, then obviously just let us know and we can make sure that we add this to our markups and add more information to our markups to help you all just understand.
It might be good to have actually something out into the channel about the algos and the BFI and what they both look to target and how they work together. But maybe that can be some future content. So what I just wanted to add to this one was understanding that, as Burton's mentioned here, that we had all this selling happening. What we're seeing here is just a higher time frame impulsive candle. So you see that price has had that swing up and that drop. So we understand that this range is our buy to sell. But after that, we've moved away very aggressively and notice that price has not come back. This is essentially a 1 minute creation of a higher time frame POI. This is us just witnessing that price delivery. And obviously, as Burton will go on to talk about this trade, he'll show you what happens next. But I just wanted to point out to say, when we're seeing these swings like this and price doesn't, react down here after this push up, and we didn't break any major structure. But again, not to overcomplicate things, but this is a very good example of higher time frame POI creation. So this is essentially a future POI now.
Yes. So
hope that was clear.
let's jump on to the next slide. So this is the actual trade that I took. So this was during Asian session, as we see. This is UK time, 3:30 in the morning. So it was asleep at this time, but because back there we see that OB that had inefficient pricing, and it was a full-bodied OB. I'm very happy to just leave an order on at 50% overnight, because I know that this is a very high probability setup right here. So, and as we see, we get that reaction there. And remember from the first slide in the H1, we get that momentum shift. So we want to be asking, when we're seeing a momentum shift, why are we getting a momentum shift here? And if we're seeing that momentum shift, let's draw it out so you can see it there. If we're seeing that momentum shift at a point of interest, that's exactly what we would want to see. And that's exactly what we get here, that momentum shift. And as we see, the price just continues lower from here. So obviously, once you gain that confidence of knowing what you're seeing and knowing what's high probability through obviously training your eyes and going through our markups and analyzing the charts yourself and seeing what price is reacting to and what's following through and so on and so on, you're going to start to become more and more confident with just leaving these orders on overnight. And it's a very nice thing to wake up into, you know, 5, 10, 15, 20% in profit. But again, it just comes with more experience and just the work that you put in, essentially. But that was the reaction there that obviously followed through. We had the major breaker structure there. We had the minor breaker structure here, and obviously just maintain this structure to the downside, liquidity creation, and continued. That was it from that one. I just wanted to add more.
This price delivery again, and then that drop away. You know, these are the little nuances to be looking at. Range creation, right? So especially where we first started to notice price delivery and started to really kind of look into detail was just at every major POI, higher time frame POI, and then we just studied it on the minute, essentially. But you know, this is when you want to know how and what a reversal looks like. If you're able to see it unfold in a minute, then that's going to give you confidence when you're holding that trade. So yeah, just wanted to point out price delivery there. Again.
One other thing I've just seen as well, this whole move on the way down, as we noticed from the previous picture that we showed you, where it was quite slow moving down, like so. Number one, this is creating liquidity for the future. Stacked above all of these highs is liquidity, so this is creating future liquidity. But also, we're following the money. You know, the money's moving from this push up, take out liquidity, breaker structure, mitigation. Now this becomes the order block, and then mitigated in here as well, reaction, breaker structure, come back up, mitigate, and then we continued lower. And this is the last point of mitigation. And then look at what price has created above there. It's created equal high liquidity. So at some point, this is going to come back up and mitigate this position. But the markets, every single move is for a reason. You know, they're stacking their money before they move the price, so that they can move it in a faster at a faster rate, and also they're creating future liquidity for something. So always ask the question why, always why, and find out the answer. These are what's brought us to the stage that we're at right now, is to question every single move. Doesn't matter what's happening on this chart, every single move in this chart can be understood. From this whole move up here, just ask why and find out the answer. And if you don't know the answer, then obviously just try yourself and use us as confirmation. If you really don't know, then just ask the questions, and we're going to be here to help you. And you're going to see all this through our markups anyway, of exactly what's happening. But we can draw anything on this chart and really understand what's happening. When you hit those sort of levels is when you're then going to start to be able to progress and leave orders on overnight and be getting into these bigger trades. But at the moment, just focus on your learning. Focus on learning and learning this skill, and then it will come over time. You shouldn't be expecting to learn this in a couple of days or a week or so. This is something that you really need to invest in, because look at the outcome to investing in the charts is these positions where 10-20% becomes very normal. But yeah, I just wanted to add that.
And this is what provides you that clarity. So, you know, everyone talks about POIs and higher time frame POIs, and you know, start from a higher time frame and go down to a lower time frame. But you know, if you're not understanding why prices, you know, one, move into these areas, and two, reacting at these areas, then you don't really understand what's going on. You know, you don't really trade, in my eyes, smart money. Smart money is all about, for me, the bigger picture, the logic behind why price is doing this and printing like this. Because then when you understand the why, the trades present themselves. You don't have to force it, you don't have to look. You can understand why each candle has been delivered and what it's trying to create, or if it is acting as cause for the future. So yeah, you know, it's we've only really just started to understand how powerful this information is. You know, we're still surprised at what you can achieve, but it's very consistent. And with that, it brings a lot of confidence, not overconfidence, but confidence that you do know how to read and trade the markets. And once you get to that stage, again, it's just further refinement. But we know that it's definitely possible. Doesn't, you know, no matter what your experience. Yes. So I guess I'm good to go on with my trades. So what we're looking at here is a trade that was on highlight tool here. Yeah, 28th on the 1 minute. Looking at its times, this is UK time. All started happening around midday, so 12 o'clock UK time, which as we know is kind of London's, you know, teeing off. Everyone's going to lunch, and then obviously New York is kind of ramping up from 12 o'clock onwards. So the reason why I wanted to pick out this trade was to highlight the reversal or momentum shift. This is something you've probably seen us drawn on our Instagram. I think there's still a post up here now with a very similar picture, and it's essentially depicting what a momentum shift looks like. And again, we're seeing one here in a very same nature. Yeah, within this picture here. Looking at that trade. So let's flip back. Sorry, guys. So the way I tend to, when I first found and understood these reversals by looking at them in the particular way that I'm about to show you now, and that is essentially A, B, C, D, and then A, B, C. And we've all heard, you know, of these A, B, C patterns, A, B, C, D patterns, you know, impulse correction, impulse, and that being a, you know, completion of a push. The way I'm kind of referring to it is just in the exact same way, but just trying to identify an A, B, C, D move. And then after that, essentially what I'm looking for is A to B, and that's essentially that full breaker structure. And that's what you're seeing me put up here. So full breaker structure, taking out a higher time frame, swing high. And this is a key identifier to a BFI footprint. So this gives us a good clue, right? I wouldn't say it's a clue. It's you know, I like talking facts. This shows us that intention has been brought into the market for higher prices, because we have this higher time frame swing high that gets broken. It doesn't get broken by much, but the fact that price has run this level shows that there's no means for continuation anymore, and we're likely to see exactly a reversal here. And what we like to see is that when we're in this A, B, C, D move, when we have the A to B, typically we'll get some sort of liquidity stacked just above an OB or a point of interest that we'd want to play. So this is typically what smart money traders would see if they're on a higher time frame, and then they're looking to execute on a 1 minute. You will see them enter on something like this. And we could look at Wyckoff schematics and whatnot, but the way we see this is liquidity being stacked just above a point of interest, which for us gives us a good sign that that's what we're likely to see. So here we have a 5-minute OB that's been created in this sell to buy, and notice that price stopped here and didn't come back to fill this inefficiency, right? It just stopped, moved away, came back into it again and moved away, and then went on to create liquidity to support those lower prices, and then to mitigate and then continue in higher prices. Now, the key I want to bring to light here is this A to B move. We know is that full break of structure or a break of structure. It has to be of some sort of higher time frame swing high. When I say higher time frame, I'm not talking about an hour, 4 hours. It can be a 15-minute, 5-minute. It all depends on this. The bigger picture that we're looking at here, but it should be relative to what you're seeing in price. So here we can expect that we've had this higher time frame point of interest here, which is I think it's the 4-hour open of a OB. I think this one was. So we've seen that prices moved into it, and now prices moving away from it. So we're not just playing this reversal structure, we're actually understanding that it's at a higher time frame point of interest. So when price moves away between this A and what I call B stage, which is that full breaker structure, price will come in and come back to a future point of interest that was created back at the point of origin. And what supports this again is having that liquidity stacked just above. Now, some people might have been looking for their OB down here, or they might not have seen this on the 5-minute, but quite clearly here we see all of this selling and only selling, and then we see immediately straight after buy-in, we see that pullback, and then price doesn't return. And this is the move that continue to break structure. So anywhere in this relative area is your entry. For me personally, I was happy to enter in this 5-minute OB because it obviously was clear to me. Yeah, exactly. So the reason when I put here and I said why, and I'm talking about it's that discount, it's that origin, it's OB, it's a created demand zone. These are all our reasons for wanting to look here to enter. And the way I break it down is a simple AB. A, B, C, D, or A, B, C, D. As long as you're looking at a full move, then a break of that structure, that's the A to B, and then we're looking for it to return back into C. And C is that, again, that POI that I'm looking for within that. And it takes some skill to find these, because I remember someone sent in a trade from here, and it worked out brilliantly. Where I was just happy with taking anything inside this whole range. So as soon as price tapped into there, I press buy. But I got a horrible fill because we can see how quickly 1 minute this candle reacted. So you see it react from point of origin. We see it break scalping structure in here, and then move up to this range that was created before we had that breaker structure here. So we can expect that reaction. So when I saw this, I essentially saw this as being liquidity being made alongside this, right? So there's equal highs, and this price moving back down is likely rather gonna just tap below this to get out any early buyers, or the stop is the safest down here anyway. But yeah, for me, this was a nice wick OB play, and this is where I look to play it. And again, I entered, I got filled just a pip higher, and then that was my entry. So I hope that was clear. Again, the focus here is seeing how a reversal structure actually plays out, and how we're seeing these full breaks of structures. They might look like they're nothing, but this is a big significant sign, because if price is going to continue, then it's not going to take out a higher time frame swing point. right? That is signaling reversal. And we see we have that, you know, pull back all the way to the top of the range, pull back all the way to the bottom of the range, and we know that we like to buy and sell at the edges, and then we see that continuation in price. So yeah, that's that one. Moving on to the next one. Sorry, yeah, this is the simple picture of what was looking at without any of the logic implemented. But yeah, you know, simple move away. You can see all this stacking that's going on here. You know, relatively 50% is where price comes back into and moves away from. Right, and this is the power of what we're seeing. This is the fractal nature of stacking of orders, average price, and we're seeing price return back to discount and average price of this range, and then we see that move away. And this is, you know, ideal price delivery. You'll see it on our Instagram. If you've never known what that's meant, this is what we're talking about. And every trade you will see will most likely follow this picture. And an entry will be somewhere down here, or it might be early entries that don't follow through. But obviously our aim is to catch that continuation of price. Again, not a reversal, continuation. This is a reversal that's happening, but what I am playing is a continuation trade based off of the logic of what's happened here.
And
yeah.
they've shown the intention of the direction as well by breaking the structure. Let me just do a different color. Shown the intention of the direction by breaking the structure. So this in here is just this above. It's a larger version of this above. This is a contained price, sideways price action, where they're stacking orders, initiate the price, causing a break of structure, which we now know to be that reversal because there's something left here that we know on a higher frame. And then now all of this price delivery here is to just create more liquidity for price to move higher. And that's how we see that strong reaction after we've had that mitigation, because it's just taken all this liquidity that was just sat above all these highs to obviously entice people to sell. And that's why we got that strong reaction there. And then again, the same thing happened again, create liquidity above all of these highs. And that's how we see them, that just get run and we just continue higher now. Obviously maintaining those higher lows to the upside after the break of structure.
And notice that between this swing high and this swing low, we look at your price equilibrium. I'm pretty sure I marked that up in the chart. Maybe I should have. You get price equilibrium and look where price moves away from. Right, relatively 50% of this range. So we're seeing it here, we're seeing it here, and we're seeing it here. All this price delivery just to create liquidity to run these highs. I'm pretty sure we had a continuation down after this, when this was just pretty sure I caught the top of this move. I think this was the hedge, can't remember. But point is that you know, there's so much in this picture to learn from that's going to help you also understand other forms of price delivery, because what we're looking at makes sense and is consistent in how price is delivered. If price wants to move higher, it does so in this fashion. If price wants to move lower, it will do so in this fashion, but in the opposite, flipped. One thing I was going to say here was, can't remember. But yeah, that's kind of that one done. Hope that's clear, guys. Hope it's all clear for you. So then moving on to this trade. So let's start off with a blank picture first. So what have we been talking about? We've been talking about this. Burton loves to draw it. Right, let's move away. Let's pull back, right, into where BFI have been stacking orders, where they've moved price away from, showing the intention of what they're doing, showing the direction of their orders, right? You get a nice, decent, notice the line here, decent push, that's showing heavy volume creating this move. It's not normal for us to see that. And then price correctively, if it's straight up like this, right? Whether it's like this, right? this all means the same thing, right? They're looking to mitigate back at where they started, where they were stacking their orders, sorry. And this is why this higher won't break for now, because they're protecting the orders. And what they're looking to do is continue stacking in the range, right? So that's what you see going on here, right? Creating liquidity within the range, and they're looking to stack, right, throughout average price. Now, you might look at this move and say, you know, this is the full swing we're looking at, and we're expecting price to come up here. But the key standout in this whole price delivery is where we've stalled. What can we see? We can see that range bound price action. And then we see price return back into 50% of this range. So what we understand is happening here, this range, price is stacking, building liquidity to be taken. Price breaks it, pauses, and then has another initiation, right? Exactly what we've drawn over here. So we'd expect then that if we do see continuation of this price, that price will not break this high, because we're following the money. This is where the money is. This high is going to be protected. So now this trade becomes very easy. Inside of here, and the way I've narrowed this down to be my point of interest, and we'll definitely get more into this in a minute, but I might let you talk on that actually. What we can see is that within that range, we've had these two candles. Right, and this again, guys, you're gonna see this stuff, but you need, you know, it all comes with time. Within this range, just sideways price action, we notice that price moves. Notice how price holds, runs it, runs the highs, right, and then moves. So what can we say? We can say between this low and this high is where the market pulled back to, and you see the close here. So this is our latest range that the price is, with the market's just given us, and price moves away. So notice how we're seeing this, you know, within a couple of candles and with over a stack of candles. This is where we talk about price knows no time and time knows no price. But we get the same concept of what's happening here. But yeah, you know, we get this push up. So now this is a whole order block essentially, right? But where we can narrow it down is to see that as price is pushed up, this was once a bullish candle, and then we pushed down, stalled, right? Creating that liquidity below, and we ran past it. And we continued to push. We slowed down here. That's why you see price come into here, create liquidity for us. So when it runs back into here, we're likely to see a reaction. And there's going to be cause now for price to run up here. And we know we've got two reasons, you know, unhealthy price action, strong move away with an order block. And we also see 50% of that is a candle that is where we can see that the real volume is, right, in between here and here. But again, this is just 50%, and this happens to be a candle that we would look at anyway, take a trade from. So then, yeah, as price is moving away, and we'll just get back into this one. So as price is moving away here, we see price creates this low and moves away. As price is moving, I'm going to change the color of my line. As price pulls back, again, we get our range, right? Confirmation of our range, and then price just continues sideways, right? We know what price is doing here. It doesn't really mean much. We can read into all of this, but you know what we can understand now what it's doing, and that is building cause and building liquidity to run this low. And what do we see here? We see a push down and a push up, right? So price didn't stay below this low for very long, and we can understand that this is probably a liquidity grab, and this is now a cause for price to move higher. And that's where we understand, that's why we had this type of price delivery. So it could support these higher moves as we started running the price higher. And yeah, you know, when we're seeing that, when we get a swing low in prices, I'll get into this in a minute, but when we zoom back out, but essentially this is what I want to pay attention to here, this liquidity grab, and this being a cause for higher prices. And because prices are reacting like this, we know this is probably a, you know, could say 5, 15, you know, 10-minute wick that is seeing a strong move in the opposite direction. Right, so you see this push here, and then price stalls, creates liquidity. We see it get run later on, but that's that section. So obviously, I hope you guys obviously already know what I've noted here. I just want to go over what we're currently actually seeing in price action. So as we get into our entry, we see that we start running this liquidity back here. We know we also, sorry, burn.
Very good.
As these highs are getting run and we're moving back into our range, notice that this lower ray line, or this is our fib tool, but points out the low of where we're looking at in this range. And notice that what price does. Price just hovers, and look at the price delivery we get completely sideways. What do we understand this to be? We understand this now to be liquidity on both sides, and we can expect now that if this is happening just below a point of interest, that this has caused the price to run and react. Why is it reacting? Because this is where the BFIs are mitigating out of their losses that they use back here. And this mitigation you're seeing, this reaction of price, is that mitigation. It's that confirmation that we just had a reaction here. And what supports that? Well, look at this liquidity and look how it got run. So look how long the market stayed up here. You know, we're on a minute chart, not very long. We get that move away. Then we see price delivery go on to respect an OB that was created in here as we moved away. So there's another nice entry. One of the members sent us a picture of getting into that as well. So it's good to see. And then just want to zoom back out here. Yeah, exactly. Go in.
Exactly the same price delivery again. Just range, initiate price, causing a break of structure, and then now this all just becomes liquidity. Liquidity to move lower, liquidity to move higher. Run the liquidity, and that's how you're seeing that strong reaction to the downside. I'll just add there.
And that continuation of lower swing highs be created. So zooming out of this, what can we see? That we had this range, we had this push up and this initiation, and we talk about liquidity being sideways price action, but understand that there's another form of liquidity which is unhealthy price action or inefficiency, which is essentially a void in price. So this also acts as liquidity that essentially acts as a magnet for price. That's what inefficiency is, or unhealthy price action is, or imbalance, whatever you choose to call it. It acts as a form of liquidity because it attracts price to want to balance that price action. So that's why we'll also see, look how price, you know, what price does, and it moves through it quickly. So this is also supporting a continuation to the downside. And this is what is pulling price down. This is why you see it move in this way. Notice this move, right? We had this range of stalling in price. We mitigate again, and look how price moves away. Right? It's because it's got multiple sources behind that move supporting it. And this is where we get into, you know, how the algos and banks work together. You know, it's just a narrative. It's not. We don't know if it's actually true. But yes, so, you know, a really nice continuation trade here. What we're seeing is a continuation of bearish order flow. For me, you know, if there's a point of interest here, I'm happy to take that as a hedge, because again, I'm kind of understanding what's happening here as I'm following this price action down. You know, some people might look at it hit up here for their point of interest, but when we understand what following the money is, and there's a reason why price is moving sideways here and moving away with force and speed, and then, you know, there's a reason why price is delivering it in this way, because it wants to support something later, right? And this is what is building a narrative in price. We know that that is most likely going to be a higher time frame swing high if it does get respected, right? We'll see it in this swing in price, continuation. And then obviously you go from there, you've got your narrative, bearish, here's a swing high. This isn't a swing high because price, you know, wasn't here for long. It needs to, you know, create something like this to be a swing high. So we don't, so it's still up here. We see price come back 50% back into discount of this higher time frame. Sorry guys, I'm drawing in yellow, probably not the best for you. Price is in between this higher time frame swing, coming back into premium pricing and moving away. So, you know, a fairly straightforward play. And, you know, this is how we're looking to get in. Notice that there's only one entry, perfect entry in here. You can enter here, your stops would have to be up here. You can enter here, just above this, your stops would have to be up here. But you can enter here and your stops, you know, again, to be the safest, has to be above the range or above the OB. But notice what I got in. You know, fairly late. You know, I don't. You know, we do see reactions happen pretty quickly. So I typically enter the market with manual orders at the moment. I just like to be more involved and feel more interactive with price. But look, you know, when you know where you're getting in and when it has this narrative and logic behind it, you see that price doesn't come back. Doesn't even come back to my stop. Right? Because look where I took the trade, inside the OB. So I knew what I was doing, and I knew that this wanted to, you know, be that move, that price wouldn't break this OB. So my stop being refined to here was just a refinement that has come over time watching price delivery. And you can see here that I can have a, you know, this is still a small stop up here, but, you know, this is an even refined smaller stop. And it is possible, as you'll see with a lot of my trades. Yes, so yeah, guys, that kind of brings us to the end of our 2 trades. Just to remind you guys, these are the markups that we went over. And oops, final one. So yeah, guys, we hope that was clear. And we hope that was clear, and it provided some extra value. Instead of just seeing our markups and just the text, you can kind of hear our thinking and our processing behind it. Of course, this is post-trade. This isn't during the trade. During the trade, is, you know, there's thinking that goes on, but it's a lot more simplistic because we're there watching price live, and it doesn't happen straight away. It happens over time. As you saw, this, you know, this is a trade that took, you know, a couple of hours to get put together. So, you know, the narrative is very clear. You have your ideas, and you're waiting for price to confirm and create calls to support the idea. Sorry again, guys. To support that idea, and yeah, like I said, it's a very natural process. Yeah. So next, we wanted to move on to what this week focus was, and then touch on what you guys can expect into next week.
Cool. Yeah. So I wanted to speak on as well observation and just making sure that you're not coming with expectation that you should know this after just 1 week. That's why our focus for the first week was observation, so that obviously you guys can just make sure that you get into the frame of mind that you're learning, you're observing price, you're seeing what the price is doing, you're letting price confirm your ideas or or not confirm your ideas, and then figure out why. So just not having expectation of you have to know this, or you know what's coming next, or you know this trade didn't work out, or so on and so on. Just observe the markets and just let it confirm to you, and let us confirm with our markups. For example, I was going to go into you know, things that it takes to become a successful trader, and this is one of the things. Is
let me
if you
quickly
don't
touch
understand
upon price delivery and observation first quickly though. So just kind of recapping over our week. So we shared a document that was observation, hindsight. No, it wasn't. I've forgotten now. What's it? Yeah, I said observation, hindsight, and power of the 1 minute. Sorry, guys, bit lost there. And what we were trying to express there is this is the process that we went through to kind of gain the skill and the consistency of that skill over time. We focused on, you know, just completely forgetting that smart money makes you feel like you know exactly what's going to happen, the concept and how people look at how they trade it and how they talk about it. But for us, it was just like, let's just completely forget that and let's just watch how price delivers. That's what we felt like we was missing. And, you know, the 1 minute made the most sense to do that because we was able to see 60 bars in 1 hour instead of on an hour chart where we'd have to wait a whole day or, you know, a session just to see, you know, 3 hours or 4 hours, 3 or 4 bars in the market. So observation for us is all about just completely forgetting what you know and what you understand and just letting price confirm what it wants to do in front of you and getting used to seeing that price delivery over and over and over. What hindsight does is it puts that element, now you have that repetitive action of watching price delivery. You don't realize that every single day your subconscious is taking in this information and multiplying your understanding of it. So that's going to build over time. We know that's going to get stronger every single day. What hindsight is doing is training your eyes for the right locations. And the reason why we say right locations, because we're watching and looking back at what price has actually reacted from. So now we're training our eyes to be at the right locations as well, not where we think they should be, and then finding out they're not, and then having to unlearn what we thought we understood for it to be there, and then having to relearn where it should be. So we're kind of skipping that process of having to unlearn, and we're just learning what should be. And that's where we're putting our attention to. So this is where we work between observation and hindsight, right? It's how you're going to build, it's how we've built the skill very quickly, but it's also how you guys are going to build the skill very quickly. And then lastly, the power of the 1 minute. And as you've seen for yourself, or not sure for the new members, but as you will come to see, but for the people that have been in this week, you know, observation of price is great, but being able to actually see these things unfolding quite quickly is an added benefit in itself. And that's the power of the 1 minute, essentially. We're able to see these higher time frame structures present themselves on the 1 minute. And then by staying on the 1 minute and by observing the 1 minute, of course, with our other time frames, we're able to get a full picture from bottom up and top down. And with that, we're able to see how every single point of interest is made, how every single impulsive or bullish or bearish candle is made. We're able to see absolutely everything. And not only that, now we're actually starting to build a logic around it and understanding why it's doing what it's doing, not just on the minute, but on every single time frame. So the power of the minute is gaining the understanding with a lot more speed, because you can do the same as what we're doing on an hour chart, but obviously, you know, it'll be I believe, a lot more boring to sit there and watch an hour chart print, just one candle going up and down, than it is to watch, 60 candles open and close. So we just wanted to cover kind of that PDF off, and kind of give you guys that summary, and then get into I just wanted to talk upon that. But then our next topic that Burton was just touching upon was you know, some of you guys have mentioned that you've got work commitments, and this is kind of how we want to kind of respond to people who are in that situation, how we feel we can provide valuable information to help you. So yeah, Burton, you can crack on. Sorry.
Yeah, so I was just going to say, like, we've been through the whole working full time and trading at the same time as well. This is nothing new to us, so we understand exactly where you're all coming from, but you just have to learn to put in the work and find a routine that works for you. If you can only look at the charts for a couple of hours a day, or you can only look at it throughout the day, then just make sure you're at least reviewing the moves at the end of the day, getting home, doing what you need to do, and jumping on the charts and reviewing these moves and reviewing the markups and marking up your charts before you look at our markups, so that you can just confirm with our markups and just do it in that way, so you can just learn in a better way. It's never going to be easy to trade and work at the same time. We didn't find it easy, but you have to find the workaround. This is a skill that's going to change your life. So it's just, how much do you really want this, and then just put that work in. There's no easy way to, there's no magic trick that we're going to tell you to help you to trade and work at the same time. You literally have to just find the routine that's going to be working for you, and just making sure that you're setting alerts at certain types of areas that you're looking at when you're seeing, for example, when you're seeing ranges being built and you're seeing that initiation, then just set an alert just below that range, and then just, take regular toilet breaks throughout the day. I mean, that's literally what we've done. Just make people accustomed to the fact that you go to the toilet, I don't know, 2 or 3 times an hour to go and check your trades. If that's what it takes for you to be able to succeed, that you've got to find your way to succeed. And the information that we're going to give you here is going to give you everything that you need to essentially see the markets in the way that we see it. The rest is really up to you guys, because this information is powerful, and we're on the minute, so things are happening very, very quickly. But if you're getting into a trade that's making 10, 20, 30%, that's potentially your week done while you're at work as well. You're making more money from trading than you are on the week. So just make sure you're putting in that work. Take the time out to do all of this. We still do everything, reviewing the moves.
Burton, you're breaking up. Quite
at the end of the session, we do that. Creative session.
Burton.
How's that? Is that any better?
Yeah, carry on.
Yeah, take over.
Yeah, to quickly go into my history, I had been working for 6 years in terms of a full-time career, over 6 years, and I discovered trading at the beginning of that time. So I've learned to make it work over time. How, coming home and jumping straight on the charts and digging in. Your superpower here that, I may have not had back then is you're having 2 guys who are already doing it, showing you exactly how they do it, which, people say they show you exactly how, but they don't really. But we're showing you exactly how, not because what we believe, but what the actual market information is telling us, right? So we're looking at it as fact. But you have hindsight on your side. Hindsight is going to be your superpower. If you can, even look at these trades, or sorry, these price delivery and how price is delivering before it's happening, and remember these ideas that you have in your head, and then see one of them play out, that's going to be one form of learning. But if then you're able to have that, and then watch how price plays out, and then look back at it and compare it to your ideas, you're going to learn very quickly. And that doesn't take very long. A couple of times throughout the day, as Burton said, take breaks, right? Pop it up on your computer screen real quick, make sure no one's looking if it is a problem, or have it up on your phone. I mostly track things on my phone personally, just due to my current situation, but it is doable. You can watch price delivery from that perspective, but use that hindsight at the end of the day. Make sure that you're investing at least an hour to 2 hours to go back over the day's worth of price action. And if you haven't got that much time, then just focus on the session times, right? London Open and New York overlap. That shouldn't take you more than an hour to do, and that hour can be well spent digging into 1 or 2 trades. And again, what you do have and what you will have is our markups, right? So if you're not seeing it, you can do what you feel like you need to do and then compare it to ours and then learn from that as well. So, you know, this information is here for you to get to that point that you need to. And work is obviously going to be a barrier, but as we've heard previously, you have to make it work for you. And it is possible, to the point where, you know, I just stopped going to work because I realized, you know, it was not what I wanted to do. But, you know, coming to those decisions, not easy, but, you know, after years of being in that situation, I knew exactly what I wanted, and I made that decision. And ever since, you know, it's been going well. But that's my story. Yes, so hopefully that covers, you know, that helps you guys who can get to the charts and who can't get to the charts. You know, for those people who don't understand what we're talking about, again, give yourself time. If once you're seeing our content for our, you know, our trades, and all our daily lessons, and, you know, as long as you're following price as well along with us, watching our Instagram to see when we, you know, that's where we're first going to put our trades up, and, you know, getting them plotted in your charts and trying to understand how and why we would have got in. You know, this stuff is, you doing this work is where you're going to learn, right? If you don't know smart money that well, that's fine. Again, you're seeing the practical application of it in a way that's going to, you know, be most likely better than what else is out there, especially when we're just talking about one pair. Exactly. You know, this is the only place that we've seen out there where you're getting the logic behind everything. And again, this is not what we believe. This is not our ideas. This is not what we've made up or names we've made up. This is just what the market's doing. And we've observed that through price delivery. Yes. So that's, I think that's probably our rant there. Again, I hope that brings value to you guys. And yeah, use it to build that confidence. It is very possible. And like I said, put in the time, you'll be surprised where you are in 1 week. Sorry, in 1 month. It's worth it. Burton, so you're just going to mention the last couple of things we've got.
Yeah, so cool. So
coming next week.
A lot of people asking the questions. By the way, is my mic working? Everything working?
Yeah, sounds clear for now.
Good.
Just
Cool.
slow down talking
so
a bit.
We've had a lot of questions about structure and time frames and how we understand structure on each time frames and what they mean. So next week is going to be our focus for next week is going to be structure and time frames. Obviously, we'll be putting out a PDF next week as well. Our Lingo document, our Lingo PDF is completed, so it's going to be sent out along with this video as well. But apart from that, just if you have any questions, just let us know. Obviously, try and figure things out for yourself, so you can discover for yourself. That's going to be the most power. But again, we're here to just answer your questions, and we're 2 traders that are just showing you exactly how we're trading. We're not trying to be mentors to anyone. We're just trying to share the information to provide as much value as we possibly can. So just let us know if any ways that we can improve or anything that you want to see, and then we can start to add that into the content as well.
Yes.
But apart from that, anyway, guys, thank you very much for for listening and going through this with us. And just let us know if you found value from this, and we'll continue to do these. But apart from that, thank you everyone, and we'll see you on the next one.
Yeah, see you soon, guys.